Hello friends, welcome back to Fab Classes. So today I am here with a new video series, and this is one of the most requested video series of all time, and that's nothing else than branch accounting from the CA Intermediate Accounting syllabus. Okay, so without wasting much time, let's directly jump into the syllabus. So I'm not going much into the theoretical part of branch accounting. I'm mainly focusing on the illustration areas only. So before going into the illustration, I'll give a quick overview of what this branch accounting is all about. Then after that, we will move towards the illustrations. Okay, fine. So now, first of all, let's understand what this branch accounting chapter is all about. So in case of branch accounts, there are two types of branches mainly. So there are two types of branches: dependent branches and independent branches. There are two types of branches. So what is the difference in case of dependent branches and independent branches? In case of dependent branches, they will not, these branches, what they do is they will not maintain books of accounts. This may be very small branches, like nearly 10 to 15 or 20. That much transactions will only occur, means there is no requirement for them to maintain a separate books of accounts because the transactions are not that huge. Okay, so what they do is they will not maintain books of accounts. But in case of independent branch, what happens is they will maintain a separate books of accounts of their own. They will maintain separate books of accounts of their own. Okay, so in case of dependent branch, however, the transactions of course, right, so someone has to record these transactions. So even though they does not maintain separate sets of books of accounts, the head office itself will record all the transactions of the dependent branch. So the head office itself will record all the transactions of the dependent branch. Okay, fine. So how these head offices will record all the transactions of dependent branch? There will be three methods through which this accounting will be done. So there are three methods through which dependent branches accounting will be done, and the first one is debtors method. Debtors method. The second one is stock and debtors method. Stock and debtors method, and the third one would be trading P&L method. Trading P&L method. Now, in case of independent branches, as I told, they will maintain separate books of accounts of themselves. There will be journal, ledger, trial balance and everything. They will maintain a separate books of accounts of their own. And in case of independent branches, there are nearly two main types of branches. That is, independent branches would be either domestic branches or foreign branches. So what is the difference between the two? Domestic branches means the head office and the branch will be in the same country. So the branch will be in the same country where the head office is. So it would be a domestic branch. In case of foreign branch, head office will be in one country and the branch would be in another country. So such branches will be called as foreign branches. Okay, so this is what branch accounts is all about. And now in case of illustration number 1, the requirement is of this one, debtors method. So the requirement is of debtors method. So let's understand the format of debtors method. That is, for these three also there are different types in which the branch accounting is done. So first of all, let us understand debtors method and we will do the illustrations, and when the requirement comes of stock and debtors method and trading P&L method, we will understand those formats and do accordingly. Okay, fine. Okay, now, so now what we are going to do? We are going to understand the format of debtors method. Okay, we are going to understand the format of debtors method. One second. So debtors method is what we are going to do. In debtors method, there will be 4 columns. Particulars, amount, particulars, amount. Okay, so one second. Okay, now the first thing which will come in debtors method is, in the debit side we will record all the opening balances of the asset. All the opening balances of assets of the branch to balance brought down. All the opening balances of assets will be recorded here. Okay, and in case of credit side, all the opening balance of liabilities of the branch will be recorded here. Opening balance of liabilities of the branch will be recorded here. And then any goods sent by the head office to the branch will be recorded next. That is to goods. This is the head office maintaining the books. Okay, head office is recording all these things. So first what they will record, the opening balances of all the assets and liabilities in the branch would be recorded first. Then if any goods has been sent to branch, goods sent to branch will be recorded next. Any goods sent to branch will be recorded next. And then if any goods have been returned from these branches, any goods have been returned by these branches to head office, those will be recorded here by goods returned from the branch. Goods returned from the branch will be recorded here. Okay. The next thing is any cash given by the head office to the branch, means for expenses, for meeting the expenses of the branch, sometimes the head office will give some amount to the branch. So if any amount has been given by the head office to the branch, that will be recorded here. So in case of head office, the cash or bank goes from us, no, so they will record all those things. This is mainly for expenses or for any direct payments. Means if the branch purchased some goods or some material and it is the head office who has to pay these payments, right? So those types of payments, so direct payments and expenses will be recorded here. Okay. And in case if the branch gives any if the branch remits any amount to the head office, that will be recorded here. Okay, by cash or bank. So when will the branch give head office, when will branch remit amount to head office? In case of sales, mainly in case of sales, right? So whenever a sales occur, whenever a cash sales occur, mainly due to cash sales, whenever a cash sales occur, the amount will be remitted as such to the head office by the branch. And also in case of collection from debtors, in case of collection from debtors also, the amount would be remitted by the branch to the head office. Okay, these two are the main things in which the branch will remit an amount to the head office. Okay, so the first thing was opening balance of all assets and liabilities was taken, and in case if any goods was sent by the head office to the branch, it was recorded, and if any goods was returned from the branch to the head office, that also recorded. And in case of any cash which is given by the head office to the branch is being recorded, and any amount remitted by the branch to the head office is also been recorded. Okay, now next thing will be the closing balances of all assets and liabilities. So here was the opening balance of assets, right? So now here will be the closing balance of all assets. The closing balance of all assets will be recorded here, and the closing balance of, once again, all assets will be recorded here, and the closing balance of all liabilities would be recorded here. All the liabilities would be recorded here, and the difference between the two will be transferred to profit and loss account as profit. In case of loss, it will be transferred here. In case if it is here, then it will be loss and it will be transferred to P&L. If it is here, it will be transferred to P&L as profit. Okay, so this is the overall format of debtors method. This is how, in case a question asks debtors method, then this is how the pattern in which we have to solve. Okay, fine. So now let us move towards illustration number 1 and start solving the requirements of illustration number 1. Okay. Okay, fine. Now what we are going to do, we are going to solve illustration number 1. Let's read it. Buckingham Bros, Bombay have a branch at Nagpur. They send goods at cost to their branch at Nagpur. So Buckingham Bros is the head office and they have a branch. Their head office is at Mumbai and they have a branch at Nagpur, and they are sending goods at cost to their branch at Nagpur. However, direct purchases are also made by the branch. Branch makes some direct purchases for which the payments are made at head office. That means branch makes some purchases, but the payments are done by head office itself. And all the daily collections are transferred from the branch to the head office. Whatever sales occurs, those amount or those collection will also be transferred from the branch to the head office. Okay, fine, no doubts. Now, from the following, prepare Nagpur branch account in the books of head office by debtors method. So they have given some details. From this, what we have to do? We have to prepare the branch account in the books of head office by following debtors method. Okay, so they have given many details, opening balance, bad debts, and many details is given. So what we are supposed to do? We have to prepare the branch account. Okay, so now first of all, let us prepare the branch account, and then we will look into all the transactions that occurred, and then we will record accordingly. Okay, So now we are going to solve. So in the books of Buckingham Bros, Bombay, what we are going to prepare? We are going to prepare Nagpur branch accounts. Okay, so as I told, let us first understand the format, or first draw the format. Okay, so what was the format? Okay, so now let us look into each and every transaction that has been given in the question. Okay, so the first thing what we have to record is opening balance of all assets and all liabilities, right? So let's see what is given in the question. Opening balance is given. Opening balance, impressed cash. Impressed cash means petty cash. Okay, the opening balance of petty cash is given 2000 rupees. Okay, so first what we are going to do? We are going to record all opening balances of assets, right? So first let us record two balance brought down. First one was impressed cash. Impressed cash, how much is the cash? 2000 rupees. Okay, fine. The next one is the opening balance of sundry debtors. That is also an asset. So opening balance of sundry debtors, 25,000. That also recorded. Fine. Next, what is given? Stock transferred from H. Opening balance of the stock is given, and in case of stock, the transfer from head office is 24,000 and direct purchases is 16,000. That is, stock consists of two items. One is the stock which is transferred from the head office, and another one is which is directly purchased by the branch. So 24,000 goods has been transferred from head office and goods worth 16,000 has been transferred. So the total opening balance of stock would be 24,000 plus 16,000, 40,000 opening balance of stock would be there in the branch accounts. Am I right? Yes. Okay, so the opening balance of stock would be 24,000 which is transferred from head office and 60,000 which has been directly purchased by the branch. So that would be 40,000. That would make 40,000. Now next, what is there? Cash sales. As we said, cash sales of the branch is given. So what happens in case of cash sales? It is already recorded here. All the daily collections are transferred from the branch to the head office. Whatever the collection happens at the branch, it would be transferred to the head office. So this cash sales would be transferred by the branch to the head office. Am I right? Okay. So in case of transfer, as we already discussed in the format, what will come? By cash or bank. In that, cash sales would be recorded as 45,000. Right? Okay, no doubt. Now, what they have given next? Credit sales has been given next. 1,30,000 credit sales have been occurred. Now think, credit sales is 1,30,000. That means money has not been received. So that type of sales is 1,30,000. Can we record all these 1,30,000 as collection from debtors? No, collection from debtors can't be 1,30,000 because it is a credit sales that occurred. But the amount which we got from the debtors would be different. Right, so what we have to do? We have to calculate the amount. Okay, so it requires some adjustments. Okay, next one is direct purchase. Direct purchase is 45,000. So the direct purchase has been done by the branch for 45,000 rupees, but the payment would be done by whom? Payment would be done by head office, right? So the payment directly would be done by head office. So now here in this particular illustration, the ICI study material has considered this payment as credit and has recorded to creditors. That means money has not been given, but we can assume as money has been given to this creditors, and we can also record as to cash or bank. So to cash or bank is also okay, or to creditors is also okay. In this illustration, in this specific illustrations, they have recorded as creditors, but we can also record as to cash or bank. It's up to our assumption. Okay, so 45,000 is the payment to be done by the head office, right? So we have to record here. As we said, to cash or bank is also fine, but since the illustration recorded to creditors, we will also record creditors only. So purchases, how much it was? 45,000. 45,000 has been recorded. Next, what is there? Returns from customers. Customer has returned something to the branch. So remember the format which we discussed earlier. In case of debtors method, does anywhere this returns from customer coming to picture? No, right? Means returns from customer is not recorded in the debtors that format or in that branch account according to debtors method, right? So this is of not importance. In branch account, this will not come. This returns from customer will not come. Okay. Next, goods sent to branch from head office. That means goods has been sent by the head office to the branch. That is there in branch account. So what we are going to do? We are going to record to goods sent to branch, how much the value is? 60,000 rupees. Okay, so no doubts, we have recorded. What is next? Transfer from HO for petty cash expenses. For expenses, head office has given some money to the branch. So we have already told that whatever money the head office gives to the branch, we will record it as to cash or bank. Petty cash expense, how much has been given? 4,000 rupees has been given. Okay, no doubts in that. Next what? Okay, so this side everything is completed, right? So now let's have a look at next side. Bad debts 1,000 rupees. So remember the format of debtors method. Does anywhere does bad debt 1,000 rupees come in picture? No, right? What is all the thing what is coming in this debtors method is opening balance of assets and liabilities would come. Then any goods sent from head office to branch, any goods returned from branch to head office, any payment made by the head office to branch, and any remittance made by the branch to head office, and the closing balance of the assets and liabilities would come into picture, right? So nowhere does bad debts come into the branch accounts. So we don't need to take bad debts. Next is the discount given to customers. Discount given to customers is also not part of branch account, so that also we don't need. So you may think why all these details have been given. I'll say later on. I'll say when we move forward with the questions. Okay. So now see, remittance to head office. Remittance to head office received by the head office is 1,65,000. So how much money we gave to the head office? 1,65,000. And remittance to head office not received by the head office is 5,000. So in total, how much money did the branch give the head office? 1,65,000 has been received by the head office and 5,000 has not been received by the head office. So in total, overall, let's record here, working note number 1. So 1,65,000 has been received by the head office and 5,000 is still in transit, is not yet received by the head office, but the remittance has been made from the branch to head office, right? So in total, 1,70,000 rupees has been remitted by the branch to the head office. 1,70,000 rupees has been remitted by the branch to head office. Okay, so total 1,70,000 the branch gave us. Okay, now in that we know out of this 1,70,000, 45,000 was given for what? 45,000 was given for cash sales, right? So 1,70,000 total money the branch gave. Out of these, 45,000 is of cash sales. That means remaining 1,25,000. 45,000 is what? 45,000 is cash sales amount. So the remaining 1,25,000 is the collection from debtors. Okay, I hope you understood. Collection from debtors. We cannot take the creditors sales. Credit sales was 1,30,000. We cannot take that entire 1,30,000 as collection from debtors. We have to see what money did we receive from our debtors. So in this case, how much money the branch remitted to the head office? 1,65,000 plus 5,000. So total 1,70,000 they remitted us, and out of this 45,000 was for cash sales. So the remaining would be for credit sales that would be received from the debtors. So the collection from debtors was 1,25,000. Okay, so 1,25,000 is the collection from debtors. But in this we know 1,20,000 we received, 5,000 what happened? We did not receive, it is still in transit. Okay, so 1,20,000 we received, 5,000 we did not receive. So cash sales, collection from debtors is how much? 1,20,000, and still in transit, cash still in transit is how much? Still in transit is 5,000. So this is the recording of remittance. Okay, so the remittance we recorded already. Remittance received was 1,65,000 and remittance did not receive was 5,000. That also we recorded. Next, branch expenses directly paid by the head office. Branch expenses directly paid by the head office. Payment is made by the head office. Payment made by the head office in the sense where we have to record here, right? To cash or bank, 4,000 was there. Same way, branch expenses, how much has been the payment made? 30,000 was also paid by the head office. Okay, fine. Next they have given the closing balance. So liabilities is not given, I guess. Opening balance of liabilities, nothing sort of that is mentioned. So closing balance they have been given. Okay, so closing balance of stock, how much? In case of direct purchase it is 10,000 and transfer from HO it is 15,000. So overall 10,000 plus 15,000, the total closing stock stock in the hands of the branch is 25,000. So we are closing the assets, okay? By balance carried down, the stock would be, one second, just let's do this like this only. Okay, so the stock was 10,000 plus 15,000, the stock value would be 25,000. And next, debtors, closing stock of debtors, it's not given. Impressed cash, that is the closing stock of petty cash, is also not given. So what we have to do, we have to find these, and the petty cash expenses 4,000 has been given. That is the branch, we have given this money 4,000, right? So out of that, branch has expended or branch has made an expense, incurred an expense of 4,000 rupees is also given. So here the debtors closing balance and petty cash closing balance is not given, and that one we have to find out. So how we will find out? First let us take the debtors only. Let us take the debtors. One second. So that's a part of working note. Let us take the debtors value. Let us ascertain the value of debtors first. Okay. So we know the opening balance of debtors, how much it was. We can do it in an accounting form also, but for easier understanding, I'll show you like this. Okay. So the opening balance of debtors. What was the opening balance of debtors? See. What was the opening balance of debtors? Opening balance of debtors was 25,000. So the opening balance of debtors was 25,000. So already at the starting of the year we had 25,000 debtors. And then how much sales did occur? How much credit sales did it occur in that year? Credit sales that occurred was 1,30,000, right? So already 25,000 worth debtors was there, and now credit sales occurred and debtors increased. So how much credit sales did it occur? 1,30,000. So overall, how much debtors was there? 1,55,000 debtors value is the value of the debtors now. Okay, in that what happened? So credit sales, how much did it occur? 1,30,000. And now see, returns from customer has returned 3,000 rupees. So the value of debtors is now 1,55,000, and out of this what happened? The customer has returned goods worth 3,000. So the value of the debtors got decreased, right? And then what happened? See where it affects debtors. Bad debt. There is a bad debt also. Out of these debtors, there is a bad debt of 1,000, and also we have given a discount to customers 2,000, right? Bad debt of 1,000 is also there. We have also given a discount to customer of 2,000. So returns is there. 1,55,000 is the value of debtors. In that, 3,000 worth goods were returned by the customers, and there was a bad debt of rupees 1,000, and also what happened, a discount was given to the customers. Discount to customers, how much it was? 2,000, right? So a discount to customers was given 2,000 rupees. So what would be the value of debtors now? See the value of debtors now. 25,000 was there, 1,30,000, so 1,55,000. Out of that, 3,000 went, 1,000 bad debt gone, and 2,000 also gone. So 1,49,000 will be the value. Out of these 1,49,000, how much cash did debtors give? How much we received as collection from debtors? Look into that column. Here, what we have recorded, collection from debtors. How much did we receive? 1,25,000 we have already received from the debtors. No. Yeah, means 1,49,000 is the debtors value. Out of that, how much remittance did branch make? How much did branch get from the debtors? We have already done here, no? So in that, how much was the amount received from the debtors? 1,25,000 was the amount. So 1,49,000 is the value of debtors, and out of that 1,25,000 has been already received. So here 1,25,000 cash received from debtors, how much? 1,25,000. So 1,25,000 has been already received. So what will be the closing balance, or now what would be the balance of the debtors? 1,49,000 minus 1,25,000 will give you 20,000 24,000 rupees. This would be the closing balance of the debtors. Closing balance of the debtors. I hope you got it now. Once again, I'll rewind. Opening, in the starting of the year, we had 25,000 rupees debtors, and then what we did in that year, we made a credit sales. So what happened? Credit sales of 1,30,000 was made. So our debt value or our debtors value increased to 1,55,000. Out of that, there was a return of 3,000 from the customer. There was a bad debt of 1,000 rupees, and there was a discount given to the customers of 2,000. So the value of our debtors was 1,49,000, and out of this 1,49,000 in that year, the collection received from the customer was 1,25,000. So the closing balance of the debtors is just 24,000. So this is the value of closing balance of the debtors. So by balance carried out, closing value of stock is already given. So what we have found out now? Closing value of debtors. How much it would be? 24,000. Okay, and then what was to be found out? Next was the closing value of impressed cash or petty cash. Same method, similar method. Just look the opening and look what happened in the year, and then we will ascertain the closing stock. So now again, working note. Okay, so the opening balance of impressed cash was how much? Opening balance of impressed cash, it's already given in the question, 2,000, right? 2,000 is the opening balance of impressed cash, I guess. Yes, opening balance is 2,000. And what happened in the year? Transfer from head office for petty cash expenses. For purpose of petty cash expenses, head office has given how much rupees? 4,000 rupees. Transfer from head office, 4,000 rupees. So already 2,000 we had in our hand, and along with that, what happened? The head office also gave some money. Keep it for the expenses. You already have 2,000, I know, but keep this 4,000 also. So how much money is there in our hand for petty cash expenses? 6,000 rupees is there in our hand for petty cash expenses, right? So what happened? Did we spend anything out of that? Yes, we did. The branch did spend. And how much is that? Petty cash expenses, 4,000. So the branch has spent 4,000 rupees for petty cash expenses. So the petty cash expenses for the branch was 4,000 rupees. So what would be the closing balance of the petty cash, or what would be the amount left in our hands now? 2,000 rupees, right? 2,000 rupees would be left in our hands now. So we had 2,000 rupees already at the opening, and then the branch gave us 4,000. So we had 6,000 rupees in our hands, and out of that 4,000 rupees petty cash expenses incurred, and now the closing balance which we have is 2,000 rupees. So this is the closing balance of impressed cash. One second. Okay, so the closing balance of impressed cash is, how much it was? 2,000. So that's all, I think, right? There is nothing else left. We have recorded each and everything which is given in the question. We have already done the opening balances, direct purchase was given, cash sales, credit sales, everything has been recorded, and now let us ascertain the balance. So now we are going to ascertain the balance. How much it would be? 2,000, 25,000, 40,000, 45,000, 60,000, 4,000 plus 30,000. The total here would be 2,06,000. 2,06,000. Now let us have a look at this side. 45,000 plus 1,25,000 plus 25,000 plus 24,000 plus 2,000. So the total here is 2,21,000. I'll write it here. 2,21,000. So what is the difference? The difference will be the profit that will go to P&L account, and the profit would be 2,21,000 minus 2,06,000. That would be 15,000. So the profit would be 15,000. So now let's look into the ICAI solution, whether we are right or not. So the opening branch, stock, opening assets. Stock is given 40,000, debtors 25,000, impressed cash 2,000, goods sent to branch was 60,000, creditors, the direct purchase was 45,000, bank to bank, that expenses 30,000 and 4,000. 2,21,000 was the total, and the net profit transfer to the P&L was 15,000. Here also every entry is correct. Cash sales was 45, cash from debtors was 1,20,000, cash in transit is 5,000, closing balance is given, stock 25, debtors 24, impress cash 2,000. So everything is perfect. I hope you understood this solution, and tomorrow I'll be back with another illustration from this chapter. So till that, bye bye. And if you are seeing my videos for the first time, please don't forget to subscribe to the channel and support me. Thank you so much. Bye.